Hey everyone, Happy New Year. Welcome to another video. Today I'm going to go over the first trading session of the new year. Today's January 3rd. I traded London session last night. We got two trades, 22R, really nice trades. They were all on the seconds time frame. So I thought it'd be pretty nice to recap over some of these to show you what I was thinking from the higher time frame all the way down to the 5 seconds and 15 seconds, which is where I executed two wonderful trades. Alright, so let's get into it. To be brief, this is my markups on the 4-hour time frame. If we go ahead and look here, you can see that we have from one swing, so this is from the swing high to the swing low, each one of these little, I don't know what they would call them, but little arches is what they look like. I'm using those to emphasize the higher time frame swings. So swing high to swing low, this is one pretty big swing. We have this swing high to this low. This is a higher low, right? So the expectation is if the low is going to be protected, we're probably going to take out the most recent high, and that would be this one. As you can see, that's what happened. So now this is what my insight was. I was just reading what had already happened. This is what the chart looked like pretty much. We're on bar replay, but this is what the chart looked like before I started my session, and I'm going to show you what I was looking for. So I thought that one thing that we can keep in mind is I was seeing the impulse and the correction. So we had a very corrective nature moving price up. We had a very impulsive push down, did not break structure here. So this correction was kind of telling me like that I was going to be looking for some sort of impulse, whether it was to the upside to come to take out this high, or whether I was going to find some sort of very aggressive impulse that would take all this corrective liquidity that we've been building on the higher time frame. Once I got this impulse that I saw, I'm going to go down to a lower time frame. This impulsive nature showed me that I was probably going to expect a very corrective pullback down to some area of liquidity, which would be a place of interest to potentially take some longs. We do see that we were on the higher time frame creating some sort of demand chain. So this demand mitigated, broke the high here, wicked, swept. So this kind of was a weak high, more than likely something that we were going to take out. We came down, mitigated the 4-hour, and what we did is we left relatively equal lows here, something that would have been great liquidity to be taking out, which is what I was targeting. So if we got a very strong impulse to the downside, I was expecting this liquidity to go and maybe something to come down into here, into this 4-hour zone. But because it was pretty early in the week, it was Sunday market open, and this was my first day back, I was expecting price maybe to come down somewhere to here just to take out this liquidity. Let's go to the 1 hour to go a little bit more with some more details here. So this was my markup showing what I thought was going to happen, something kind of like this, just a pretty steep drop. You're going to notice that this drop did happen, but it happened during the New York session. I actually got counter trend, or counter trend, pro trend, depending on the time frame you're looking at. I actually got both of my entries as longs on the seconds time frame. So we're gonna go over those. You can see what happened after. So we did get that very aggressive drop down, and we did have change of character on the lower time frame, pushing price back up. So that's something that we're gonna take a look at. Let's go down a little bit more in detail let's go to the 15-minute. So here on the 15-minute, this is already on. We don't have too much. If I refined this 4-hour zone to the 15-minute, the extreme, this was an unmitigated extreme. You can see this is where price came down to. The London session was trading. I stopped trading around. I only traded for about an hour and 22 minutes. So I wasn't on the charts too long, but you can see that New York was responsible for this drop, and this was a perfect textbook entry that you could have taken on this. Now I didn't take this because I only pick one session a day, and I'm pretty happy with the results that I get with, I only traded an hour and 22 minutes and I got 22R. So, let's go. We're on the 15-minute. Let me show you some of the things that I was looking at. So this is going to be a little bit messy. We're going to go down to the 5 minutes to see this. But more than anything, what I want you to see on this time frame is that price was basically just very, it just died. We didn't have too much correction here like I was expecting. Price just rolled right over. Usually when that happens, this is a pretty much a weak high, and we can probably see that this is probably just going to be taken out very easily for later. So when price was coming down, as soon as I got on the charts, it was probably like right around here, and I was looking to potentially take this lower to get a tap somewhere into the on a lower 15-minute refined zone, somewhere around here potentially. We didn't get that. Price kind of from here we did take out these lows. We did liquidate, and then what we could see, it was a demand chain was forming on a lower time frame, and this is where my best entries were. So let's go down to the 5 minute. We're going to focus just on this zone. We're going to replay back here just for the sake of focus. I'm going to show you the lower time frame, what I was looking at. So when I came to this chart, pretty much this is what I was looking at. Let's go here. You can see that we have structure here. So this was, let's say, the lows, pull back, go high. This was a lower high. Price comes down, lower low, lower high. Here we have a doji candle, which provides a beautiful opportunity for a nice target. This is something that I definitely wanted to see price come back to mitigate on the 5-minute time frame. It was also available. You can see it on different time frames. On the 15-minute, this is what it looks like. So I focus more on the body. As you go down time frames and you refine it, that's a 6-minute, the 5-minute. Let's go to the 1 minute just to show you what it looked like. On the 1 minute, you can see that this area had a lot of unmitigated zones. So not only did we have this that really hadn't been tapped yet either. Let's change this to a supply zone. We also did not mitigate this, so this was unmitigated. Technically, the bottom of the range, is something that we reacted to, and so this was also potentially what we would consider maybe a flip. It just took no liquidity, therefore it would be used as liquidity to target something up higher, right? And at the same time, we also have this zone that was responsible for the break of structure down here that took this. So we had a lot of unmitigated zones. So I could see that, well, two things to take note of. When we see that there's a lot of unmitigated zones on, let's say, along the way as we're going short, many times we would want to take trades up to here, right? But the reality is not necessarily we have to come to those prices now, right? A lot of times price will just die, go all the way down, and wait until it finds a valid demand zone before it pulls back into these prices. So it doesn't need to come back to mitigate any of these zones now. It's not necessary, right? There's a lot of reasons why, and the reality is that we just don't have a purpose to go buying into these areas of supply just yet, right? So more often than not, most of people are probably going to be looking for longs from demand zones, or they're going to be looking for sells from supply zones. At this point, we're kind of in no man's land. We're not really in a demand zone. We're not really in a supply zone. We did react to this area, to this demand zone. Let's fix this. And we did create a failure of this demand, which would have normally signaled to us that price is going to continue short. And the reality is many people probably were looking for shorts and did not get opportunities here. But I'm going to show you what I saw that is going to be very helpful to you. So my first trade was starting somewhere around here, right? So showing you this stuff isn't really going to help you. We're going to move down to, let's go to the 1 minute. The 1 minute should provide enough information for us to take a look at. I'm going to show you, let's see, I'll leave my entries out for now. So first thing that I wanted to keep in mind is what we can see here is that we're consistently making new lows, and we're very impulsive to the downside, right? So downside is very impulsive in many cases, but then once we get around to this area, what do we have here? At this point, instead of making just new lows, we make a new high. At this point, what do we have? This is a change of character. Now, it's on a 1 minute time frame, and therefore it's not something valid that I would just look to take longs off of. But this is showing me that, there's some potential bullish intention. This probably reacted to something left. And usually that's what happens. Let's see what that could have reacted to. Let's take a look at this right here. So here, what do we have? An unmitigated extreme. And we're on the 1 minute time frame, and these areas are incredibly valid. It's important to look for places like this. An unmitigated extreme. This was the last push down before we got this rally up that took out all the liquidity on the top side of this. So all this was liquidity that we took, and this was the origin of the move. And that's only on the 1 minute. If we go down to the seconds, we'd probably find something cleaner. But look at that. Price came in to tap and reacted to this. Showed us some sort of bullish intention. So that's something that I was looking for, considering that this push up took out 1, 2, 3 levels. And right here, what did we do? We came to mitigate. So we created some liquidation and a mitigation of this zone. Now what I wanted to see is how price was reacting to this, right? So I came to the charts around, I think around 23, let's say hour 23, that's around 11 p.m. my time. So when I saw this, I'm obviously looking in hindsight in this case, because I started a session somewhere around here, right? But I saw this, price pushed up. What do we have? An unmitigated supply level here. Now this supply level was not responsible for any breaks of structure, but we just came down here, left a little bit of a wick. We saw price was corrective going up, so we had an impulse to the downside, corrective, structure pushing back up, mitigation of the supply zone, price reacted, came back, and then we have, technically this is an unmitigated extreme on a lower time frame. So this could potentially just be considered a decisional point, right? So we have this supply zone that was responsible for the break in structure all the way down here for a new low, right? So this took out all of this corrective liquidity, and the swing low that reacted, there was a reaction point to this flip, or not, this wasn't the flip, but to this demand zone on the 1 minute. Therefore, this area was a flip area, right? Because we formed an extreme, right? And then we got failure of the point of interest. Therefore, this is, in general, while it's a 1 minute time frame, this area was a good flip zone. And that's exactly what we got. Price came in, tapped. It looked like it did sweep the area, maybe on a seconds time frame, just kind of barely swept. But we did get a reaction here, and price pushed very aggressively back down, right, as before it continued. So this was an area that I was looking for, that was a flip zone that I was potentially looking for take profits, or for price to come back to continue short. Because at this point, my bias was still short. We're still consistently making new lows. So what I was expecting was price is going to be very corrective to push up. And originally I had shorts in this area, so that I could get something like this all the way down to target this 4-hour zone. So originally, that's what I was looking for. Now, I don't trade with a bias necessarily. I trade based off of reactions. That was something that I was expecting. So as I was looking at the chart like this, I could see that now what we were doing is we had this impulsive push down and a very corrective buildup of liquidity, right? So we're consistently mitigating a lot of these areas, maybe small sweeps to mitigate something in here, but we're building up a lot of demand here, and this is relatively low volume too. I mean, we're not getting very aggressive pushes up, and therefore this to me is showing some sort of weakness. At the same time that we have all this buildup of liquidity here like this, at that time that I was looking at, we also come up here, and this is where we take out the low. So this gives me a lower time frame change of character. This isn't necessarily something that I would take a short off of unless I had more, let's say, if I had a better reaction to something like this. Now, this would have been a good short in terms of if you would have shorted from here, taken this low to break this structure to take out all this liquidity. That would have been a great opportunity. At this point, I was already on the charts, but the reality was I did not want to take a short from this area, knowing that we still have all this unmitigated extremes and flips that needed to be tapped. So if anything, if this was going to pull back, I was expecting this just to push right back up to mitigate these areas. What we did end up getting is we did get relatively equal highs. So for me, this was just further validation that we are probably going to sweep this area and come into the zone. Now I was expecting shorts from here, so that's probably at the point at which I would expect it price to just die. But what ended up happening is we got a reaction to this area that was giving us and signaling a change of character on the 1 minute time frame. This came down and swept all this liquidity, and therefore we liquidated those lows. And now what do we have here? At this point, we had these equal lows. Price pushed back up, mitigated the 1 minute time frame, something on the seconds, took liquidity from these equal lows here, and took all the liquidity within here. So therefore, at this moment, I was no longer looking for a short from this area, because before that I had a short, I believe somewhere like this. I had it just set automatically. I think it was a 1 pip. Something like this is what I was looking for, all the way down to the 4 hour. Now, the reason why I deleted that order was because once we had this reaction push down and take all this liquidity, we already swept all of this. Therefore, there's no more reason to continue lower in this case. Now what we were targeting is this liquidity. And at the same time, while we had these relatively equal highs, we also have all this unmitigated flip and extremes in here that also would be beautiful liquidity to take out as well. So this was something that could also have been taken out, and we wouldn't see that until obviously once it happens, right? And so I'm going to show you what I was looking for. The moment that this happened, and I got a new change of character here on the 1 minute time frame, right? So at this moment, this is where price signals bullish intention. And let me go to, let's label this properly, and then we're going to go down the seconds time frame. The reality is, if you were trading the 1 minute on this, you probably would have missed a very quick, beautiful entry. Therefore, the reality is you had to be on the seconds time frame for these trades. I traded on the 5 seconds and the 15 seconds. My first entry was on the 5 seconds. Second entry was on the 15 seconds. Let me go over those specifically with you right now. Okay, so on the 5 seconds, this is what price looked like. So what do we have right here? To me, this, let's give you a little bit more to see here. What we had here is we had the generation of relatively equal lows that were swept by this. So this was the origin of the shorts. Let's make sure this is clear. So we'll move this here. So this is the area that basically, did it mitigate? Not really. This was the, let's say, the lower high. This was the high that created this low. So from this swing, we got this. Let's do this. And this is what I would consider a liquidity point of interest. Only after this became a strong low by taking out this high, thus giving us a change of character. So before this, what we kept getting was lower highs and lower lows, right? At this moment, we pushed up. This left behind relatively equal lows. This was the last lower high. At that moment, we made a lower low that took liquidity. This took structural liquidity. This was the lowest point at this moment in the entire, let's say, in the entire day. Before that, price had just been coming from above, right? Coming short. So this was the lowest point, and this is where we took our entry from. From this, we took out this level. So we took out one high, two highs, just with this. Then we took out three highs. So we took out three highs. At this moment, what I was looking for was an entry from an unmitigated extreme or decisional. And that's what we got. So let me show you my entries. So entry 1, this is what it looked like. I had it set, I set a limit order on here. This was a 1 pip stop loss, so this was a very clean entry. Realistically, what I was noticing here is, while this was the extreme and this was untapped, and this did create a minor break of structure here, the reality is the majority of the momentum came from this zone. So here we had more of an interaction. This is where we got price to push up. This basically mitigated, or not mitigated, but this basically reacted, created an interaction between buyers and sellers from this area right here. And then this was technically the flip zone. So we have this minor flip zone, or, well, it's a flip zone, but it's just very small. So what I'm saying is minor, it's just very tiny, right? And at the same time, we have this entire unmitigated decisional, right? Because this is technically still the extreme. So to cover myself, I basically set my entry just at the base of this, my stop loss just right underneath here at 1 pip. And this was probably the fastest, or one of the fastest trades that I've ever had hit take profit. You can see that what we had was a corrective push down. We have tap 1, price pushes up, and this is how we trade reactions, right? So while I set a limit on this because it was so clean, and this is also the 5-second time frame, you really don't have very much time to react to trades like this. The moment that you would have seen this react to this unmitigated zone and price took out a lower high, this would have been a signal for another entry, right? This is probably how you would have taken this. You could have taken an entry from here like that and just said, we're going to enter off of this demand, stop loss just below. This would have been a 1.1 pip stop loss, which is still very small, right? Now I already had my limit, but this is just further confirmation. This push up that took out this lower high. We came back, mitigated, and got we got a very aggressive reaction or explosion of volume at this moment. This is on the 5-second time frame, so from here to the top, it's only a few seconds. And this was a 10.5 hour trade. So here we were targeting 10.5 pips, and this was a 1 pip stop loss. Why was I targeting this zone? Well, this was a necessary trade that I thought was a very easy trade to take. The reality is that we had relatively equal highs, or equal highs just above right here, that needed to be taken out. And the nearest supply zone was this first one that previously I had been looking for shorts, looking to enter shorts from. Right now, if you remember, we did have a lot of unmitigated extremes here, something in the wick here, this one. I mean, there's so many zones that we could have targeted. So to play it safe, I wanted to take, especially being counter trend, because generally we were looking for shorts this entire time. I only wanted to take a buy to the next nearest supply zone, because the reality is after it can tap that supply zone, we could get a very aggressive reaction and go short from there. So this was relatively easy. Why? Because this was a liquidity point of interest. We got a change of character on the 1 minute time frame, better viewed on the 5-second time frame. We had an unmitigated decisional. We had a strong reaction that caused a change of character on the 5 seconds. And basically we took the long entry from this unmitigated zone to sweep liquidity into the first supply zone. And now If I had targeted higher, this would have been a much better trade, but this was safe, 10.5 pips for me, and this trade lasted probably like 30 seconds. Let's see, from here to here's, oh, this was like 2 minutes. So this was a very quick trade. I just remembered it exploding so fast. So now let's look at what followed after this and the secondary entry. So at this point, what do we have? We have this unmitigated extreme. We had an aggressive reaction to this zone. So we have a lot of volume that came into the market here that came and aggressively swept liquidity. But what did it do? It also left behind equal highs. So while you might consider this a sweep because maybe it's 0.1, maybe it's a tenth of a pip above, but the reality is I saw this as equal highs. So now that we swept all this internal structure, now we had these two equal highs. So now I was thinking about targeting those. And on a 15-minute time frame, what I was looking at was I wanted to take price a little bit higher to, I believe the 5-minute time frame shows the best, to this. So this 5-minute unmitigated extreme, this lower high, would have been a beautiful target to take profit from. So I had this as my overall target for longs, right? And so if we go to the 1-minute time frame, now that I saw that we had this reaction on the 1-minute time frame, we basically took out these equal highs. We swept this. In a way, you could have seen this as a sweep, but it also left equal highs. I saw this as a 5-minute change of character. So on the 5-minute time frame, what are we looking at, right? So we're making lower highs and lower lows, right? Lower high, lower low. This one was a liquidity point of interest. And at this moment, we got our change of character on the 5-minute. We took out this structural liquidity, came up and mitigated this. So liquidation, mitigation, right? We have a V-shaped recovery, a very aggressive V-shaped recovery, price pull down. And at this moment, I was now expecting that this point of interest, the liquidity point of interest from which I took my first entry, this one was now going to be heavily protected, because this was the moment that we took structural liquidity, that price reversed, and therefore that was going to be the place where I was looking for my next potential trade. Now the second trade that I took was on the 15-second time frame, so we're going to stay on the 15-second time frame to show you what I saw. So after this trade came, took profit, hit TP, we could see price was correctively pushing down. This would have had a lot of people confused, as now what we're doing is we're showing a lot of bearish intention, making new lows. Here, we left relatively equal lows here. We saw price push back up. This was showing me that we had some sort of potential for, continuation of bullish momentum. Now at this moment, there's two things that we could have looked for. I could have looked for buy here, and this would have been probably a really good opportunity to trade something like this. But at the same time, we do have all this liquidity underneath here, and we do have an unmitigated extreme. And unmitigated extremes almost always get tapped. So here we have this type of liquidity. We have 1, 2, 3, 4, 5 taps, 5. It's a developing demand chain, right? So normally these are something that I would take. I would say, well, I'm going to take each one of these because they are stacking up above each other. But the reality is, because we still had this unmitigated extreme, if you were on a 1-minute time frame, you would not have been able to see this. You'd only be able to see this on the seconds time frame. So on the 15 seconds, it's also very clear. This is the last time that price pushed down into this area, and this is where we had the engulfing candle, the first engulfing candle that broke minor structure internally, right? And therefore, what I was awaiting was for a signal to go bullish. So what happened is I dragged this area out, and I was just being patient to see what's going to happen. Now we're on the 15-second time frame, so the break between the take profit of this trade and the entry of this trade was about 32 minutes. So it's about half hour where we're just sitting looking at the 15-second time frame for potential new opportunities. So what I was looking for was a sweep of liquidity, which we had 1, 2, 3, 4, 5. We swept this liquidity, and what did we react to? We reacted to this 15-second unmitigated extreme. Now what I was looking for is I was awaiting a change of character. At this point, what did we have? This supply, let's make it a little darker so it can be a little bit more clear to you. So this supply, we reacted to it, and we pushed down. What did we not get? We did not get a new low. So when we did not get this new low, I was expecting that, okay, more than likely, this is going to be continued to be protected. So this price pushed up, but at the same time, this could be considered a weak low. It's a weak low because it did not break, it did not break the lower high or the initial push down, right? So this was the initial supply that swept all this liquidity and mitigated this. So we had liquidation and a mitigation. We also have a V-shaped recovery, once again. Now, I didn't create this. Obviously, this is something that I've learned in trading from, other traders, but I do have it on my chart. I believe Albie teaches this the best. Liquidation, mitigation, V-shaped recovery, change of character, and flip. So we had the liquidation on the seconds time frame, the mitigation of a 15-second point of interest, V-shaped recovery. At this point, I'm expecting this could be a flip, right? So price pushes down, and now I'm awaiting to potentially see this as a potential entry, and I'm looking for the point of interest, this one, to fail. So I want a change of character. Once we see price building up here, we see that it pushes up, and very lightly it sweeps it. So we only get a wick sweep, but we do get body closures above this reaction, right? So at this point, I consider this a reaction that swept and changed character. So at this moment, now I'm looking to take a buy. Now in the seconds time frame, what could I have looked to buy from? I could have bought from here, or I could have also bought this entire zone right here, the low, and just protected against this. So what I was thinking when I saw this was we have a liquidity point of interest. So this is an extreme unmitigated that took liquidity, right? If we had a very aggressive reaction from it, they came and swept supply zones but left equal highs that are then going to be targeted by me, right? We have this liquidity being built up that basically left us with, weak highs above, and this was just low volume generation, in my eyes, very corrective. We swept that. We get a, once again, a liquidation, the mitigation of the 15-second POI. We have the V-shaped recovery. We get a potential flip. We basically create a failure of the point of interest of the last supply that pushed into that mitigation that swept liquidity. So the supply is now invalid. We get an official change of character, and now I'm looking to take longs. Therefore, I believe that this entire area is protected. This trade was taken solely on, all those confluences, but at the same time was taken with the idea that this low will not be breached until we take out the equal highs above and mitigate the 5-minute point of interest that was that 5-minute doji candle above, right? So that's what I took this trade off of. This was a little bit bigger of a stop loss. I wanted to make sure to be safe, and good thing that I did, because the reality is this was a very close one. Let's had I cut my stop down just to here, I would have very easily been swept. And normally I like to trade with 2-pip stop losses. A 2-pip stop loss would have been perfect. All I did was I kept my stop loss just a little bit below that. So 1.7 pips, very, very close. Spread could take you out if you didn't account for it, but my 1.7 pips already accounts for spread. So my spread was almost nothing at that moment. So now that we get this official change of character, price pushes down, I'm expecting this to be protected. So I didn't expect this to be swept at all. Now, what you see that on the seconds time frame, we do that, right? The reality is that's why it's important to have a buffer, because had I adjusted this stop loss just to here, I would have been stopped out of this 11R trade by a tenth of a pip. So it's always important to have a buffer. I decided to leave this just to be safe below here. Did not expect that to come back to be tapped, but we were still in. So after we have this, what do we have? Continuation of higher highs. So now what do we have? This low was supposed to be protected. Price comes back down. This, while it did not necessarily mitigate anything that we could have seen, you could have just said that it mitigated this the initial push down right here, maybe to like the almost to the 50%, almost to the equilibrium of that move. This was simply just used as liquidity, and price pushed back up. What did we get? No new highs. So at this moment, you could probably be thinking, gosh, like, I just took this long and it's not looking too pretty. I might just, have a failure. Price might just liquidate me, right? Because, we could be wrong. You never know. So, but the reality is this was a very clean demand chain that was forming. This was the early development of the demand chain. We did sweep this, and we did barely come down to, just break a little bit lower than our original area where we took our entry. I probably, looking back at this, I probably should have taken, let's say, this like this, and maybe taken a trade at the equilibrium. But at the same time, there was risk of potentially not being entered in. So, I call it safe. At the same time, this was also a market entry, so I don't think I do not believe I set a limit. I believe I just tapped in on this one. I believe it was market entry. So after this was the last push down, and what did we also do? We also left behind an unmitigated extreme here. So this was something that potentially we could be looking to come back to if price had to come back, right? So you can see now that what do we get? We get a this was a very aggressive push up. We're starting to be, we started to making new highs, and the lows are higher lows, higher highs. You can see that we're pushing up. In a way, this is kind of corrective, but at the same time, on a 1 minute time frame, it looks very impulsive, right? So it's a matter of perspective on your time frame. This looks pretty impulsive. You can see how aggressive we're moving up. We're taking out highs here. So at this point, once we reach this, I'm gaining more confidence in this. You can see that we continue going up. This was the first area that I was targeting. I was expecting price to sweep this area. Price came in tapped on a lower time frame on the seconds. This reacted here. We got a wick, price pushed down, but notice how we did not give a change of character. We just pushed a little bit down. We did not make any lows. We did not take any liquidity, and then we blew through that. So that was giving me a sense of security. Price pushed up. This was an area that I was also eyeing potentially, because obviously you can see where that's where price came to stop before hitting take profit. I like to look for areas at which price basically sweeps, or not sweeps, price where area is basically the last engulfing candles. So buy to sell, sell to buy. And so we had a lot, the same way as when we looked at the previous area on the 1 minute time frame, we have tons of unmitigated zones. So unmitigated extremes, flips. This is an area at which we came to, let's do this. Wrong one. Let's do this. So here we get this push down, price liquidates, but what do we get here? This was a, what do we have here? Don't remember what exactly I marked here, but I believe that this was a lower time distribution. So obviously we're on the 5 seconds, so it must have been on the 1 second. You can see the price here pushes down. We get a reaction, so potentially a flip on a lower time frame. Then price breaks through. Here we have, another distribution happening on a lower time frame, and this is the one that takes this liquidity. Maybe on the 15 seconds it'll be a little bit cleaner. Let's see. What are we at here? I might have to. Where are we at? Let's go fix that. Here we go. It's a little bit more clear here. Here we have a doji that was unmitigated. Let's do this. Although price looks to come in to tap the bottom of the range, we have a pause in the market where a range was generated, and that looks like it was a reaction to this area, right? So if I take out this gap candles, it might be a little bit more clear. So we have a gap here in price pushes down. Here we have a small range developing on the lower time frame, and this area was basically where we had a push down. We have another doji, and this was where we get the break of structure before price just dies off. So something in here, kind of like this doji candle, was something that I was paying attention to. Let's go all the way over here. When I was trading price, and I saw price came and reacted to this, I looked left to see that, and this trade, you can see that it turned around right here, but what do we have? All it came down to do is come back to mitigate this. And in fact, it maybe swept it a little bit, but this trade was still in. So you can see here, what do we get? Price came all the way, how shy was it? 1 pip away from take profit from TP, or actually this would have been TP. Gotta adjust it a little bit. About 2 pips from 2 pips away, 1.2 pips, right? Price comes back down. What do we have? Mitigation of this untapped extreme. Also swept a little bit just below that, but what do we have? Price explodes back up. This would have been a beautiful secondary entry. At this point, you can see price is continuing up, hits our take profit, and we're basically done. So that's how we caught 22R. Let's drag this across. Oh, wrong one. There we go. Just a little bit more clean. So 22R, all on the seconds time frame. This is what price pretty much looked like. Remember, this is a pretty good lesson. If you're going to take trades and you're going to do counter trend or pro trend, just be aware of the higher time frame. In this case, if we're counter trend, I'm always going to take trades to the next nearest supply or demand that's valid. That's what we did here. This was a very safe exit, very safe TP. This was a very safe TP. We got a reaction here, but what do we get? Eventually, we get the reaction we're looking for. Price came in. You're still in on this trade. Price comes in, tap, take profit. You're done, right? So very clean. We had liquidation, mitigation, V-shaped recovery, change of character, and this is where we got the last flip, and we're done. So I hope you enjoyed today's lesson. I hope you can apply some of these things to your trading, and I'll see you for the next trade recap. Thanks for tuning in.